Today, Ether rockets more than 20% amid hopes that spot Ether ETFs will be approved this week. Uniswap responds to the SEC's Wells notice in a new filing. And PitchBook's Robert Lay unpacks the firm's latest crypto VC report, which revealed funding rose to $2.4 billion in Q1. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies surging overnight as investors grow more confident that spot Ether ETFs could get approved this week. Ether rallied a whopping 21% in the past day, now just shy of $3,800. Bitcoin also got a big boost, as high as $71,000 for the first time in more than a month. By noon, though, it retreated back to around $69,000. Now, as I mentioned, a lot of the gains in the past day came from new optimism that the SEC will give the green light to spot Ether ETFs. Experts were previously more skeptical that these ETFs would get the go-ahead, considering the SEC's uncertain stance on Ether as a security or commodity. But Reuters reports that the agency is asking applicants to fine-tune their proposals for spot Ether ETFs, a sign that the SEC could be willing to consider these investment products. Now, we asked the SEC about that report, and a spokesperson said it doesn't comment on individual filings. And as that story from Reuters came out, another report, this time from CoinDesk, pointed out that Fidelity amended its Ether ETF filing to remove staking as a feature of the fund. Okay, let's talk about the top stories. Uniswap just filed an official response to a Wells notice it received from the SEC last month. That letter warned Uniswap that the agency identified potential violations of U.S. securities law. Now, a Wells notice gives the recipient of a letter a chance to respond and explain why legal action is unwarranted. And in this 40-page filing, Uniswap Labs details to the SEC all the reasons why the agency should not pursue the case against them, including that none of the lab's conduct runs afoul of the securities laws. The filing says the SEC alleged Uniswap Labs is operating an unregistered exchange, but that the allegation is, quote, meritless given no securities transactions take place on the protocol. Uniswap's chief legal officer said that the SEC's entire case rests on the false assumption that all tokens are securities and that, quote, tokens are in fact simply a file format for value. Now, I spoke with Uniswap's chief operating officer, Mary Catherine Latter, just after the company filed its response to the Wells notice. Here's what she had to say. Uniswap Labs took a big step this afternoon, filing an official response to the Wells notice the company received from the SEC last month. Now, in the filing, Uniswap details all the reasons why the agency should not pursue legal action. Now, I read through the response, and in it, Uniswap argues that it's not operating an unregistered exchange and that none of the lab's conduct goes against securities laws. What is the key argument you're making in this case, and what was the main point you were trying to get across to the SEC?
Talia, thanks for having me. So Uniswap Labs is a New York City-based startup. We build software on top of blockchains that lets users hold their own assets and interact with each other directly using tokens. And so there's a core assumption in what the SEC is asserting, which is that anything that's a digital file format, anything that's represented as a token on Ethereum is a security. It's kind of akin to saying a PDF is a stock certificate. And so their arguments against us, we think, extend their remit to communications and internet protocols and well beyond the remit of just securities to all forms of digital assets potentially. So if you read through the response as you did, we go through just the definition of a securities exchange, of a securities broker, of an investment contract, and simply just compare the legal definitions to the facts of the Uniswap protocol, of the products that we build that they're asserting are brokers, and then go through it. And it doesn't match up. And so this is a case of the SEC trying to rewrite the rules and then enforce them as they go, well outside the boundaries of today's law.
Now, in the filing, Uniswap Labs outlines some of the risks of carrying out legal action against your company, noting that bringing this case would, quote, encourage Americans to use harder to regulate foreign interfaces and trading protocols, while also discouraging future innovations from attempting to foster new ideas that bring much needed competition and innovation to financial and commercial markets. What are some of the other risks associated with the SEC's approach of regulation by enforcement, specifically as it relates to your company?
Well, there are millions of users who use our products, and the products fill a need. They allow people to transact with stablecoins or Ether, Bitcoin, and other assets that the SEC has indicated are not securities. And so those users will then potentially use other interfaces that could be offered by those who are not operating in broad daylight in New York City and trying to understand the law and comply with it. And so that just exposes, in today's instantly digital and global markets, the fact that you can have markets on the internet means that users in the US can access products from all over the world. And that has more risks associated potentially. So we would much prefer to have clear rules of the road in the United States and be able to interact with US users with knowing what the expectations are of us. So that's what I'm concerned about, is that it encourages companies to go offshore. It enables actors who don't have names and faces and who aren't engaging with policymakers, and that has all sorts of potential risks. Uniswap has never been hacked. We take security incredibly seriously, and that's a security track record that we're extremely proud of. If you're interacting with an anonymous team, you don't know what their security track record is, and that poses a real risk to a user.
Expanding on what you just said, in the filing, Uniswap argues that policy questions should primarily be reserved for Congress. Well, this week, the Financial Innovation and Technology for the 21st Century Act, which is aimed at creating a regulatory regime for U.S. crypto markets, is expected to receive a vote on the House floor. How will that development impact your business, and what are you hoping happens with that bill?
What I'm really excited about in this bill is that this would prevent something like an FTX. So it basically addresses centralized exchanges and those crypto intermediaries that do hold assets on behalf of users. Uniswap, in contrast, does not hold assets on behalf of users. If you interact with Uniswap products, you hold your assets yourself. So the bill itself recognizes that decentralized blockchain technology is very, very different from centralized blockchain technology, that it doesn't actually have some of the same risks to users. You aren't entrusting your digital assets to someone else. And so what I'm excited about with this bill is two things. First, I'm excited that it recognizes that critical consumer risk in centralized exchanges. Two, that it allows for more time and examination of decentralized technology. And then a third, it's just encouraging to see bipartisan support for a dialogue. It's encouraging to see Congress do what they're supposed to do, which is engage with new topics and shape policy through debate, discussion, and a vote.
Now, we reached out to the SEC, and a spokesperson told us that the agency does not comment on the existence or non-existence of a possible investigation. All right, turning to crypto venture capital funding for our other story. PitchBook data out yesterday revealed that startup funding rose for a second straight quarter to hit $2.4 billion in the first 3 months of the year, amid expectations of lower interest rates and the debut of spot Bitcoin ETFs here in the U.S. The rise in funding that began last quarter marked the first time that VC investments in crypto startups have risen since the March quarter of 2022. So what's behind the shift in funding? Crypto World's Mackenzie Sagalos sat down with PitchBook's crypto analyst Robert Lay right here in studio yesterday to find out. They discussed the report's findings and what we can expect in the months to come.
New data out today from PitchBook looking at crypto VC activity. The thing that stands out to me is that it seems that so much of the money is going into the infrastructure space and DeFi. So much less VC dollars going into that category. Why is that?
Yeah, so infrastructure has been a theme, really over the last year and a half, really through the bear market, and now this year as well, continuing seeing a lot of, blockchains, layer ones and layer twos, interoperability protocols and all that, just because the way investors look at it is that the infrastructure is still pretty underdeveloped, and they think that in order for us to get to the scale and the throughput that we need to support, the billions of users that they're hoping that's going to come into the crypto ecosystem, we really need the infrastructure to become much, much better. DeFi is a little bit different, just because a lot of users left, during the bear market. We're starting to see users starting to come back into DeFi. TVL, which is a measure that we use, is called total value locked, that just to see traction in the DeFi space. That has gone up a lot. So we could see DeFi investments come. But another interesting aspect is that a lot of DeFi protocols raise money through token sales. So they sell tokens to the community, private token sales, public token sales. So they don't necessarily need to raise venture capital. So because they're not raising venture capital, you really don't see that recorded in the data amount of VC raised for DeFi.
Anecdotally in the space, some people feel as though DeFi hasn't lived up to some of the promises. There's this, lack of understanding of actual real-world use cases that make sense. Is that part of the narrative here?
Partly too. We've seen. Look, we think DeFi is an interesting space because there are unique use cases for financial services. The challenge is that what we've seen with DeFi over the last, let's say 4 to 5 years is that it's just a lot of crypto traders trading to other crypto users, So we're looking at what are the non-crypto use cases for DeFi. And there are a lot, tokenization, this is a trend that we've been talking about for quite a while. The infrastructure, I think, of DeFi, there could be a lot of use cases for traditional financial services. We just haven't seen that come to scale yet. Mm-hmm. But, there are a lot of protocols that are building. We look at protocols like Maker who are doing, it's a decentralized borrow and lending protocol, but they're working on tokenizing off-chain assets on-chain. So, they work with a lot of traditional banks already that are tokenizing their receivables, for instance. So you're starting to see some of that come on. We know JP Morgan used Uniswap to do a test trade of tokenized government securities in late 2022. So we're starting to see testing and use cases coming along, but it's, obviously a lot slower than we expect, but you can expect to see more of those come in the DeFi space.
Yeah, BlackRock recently tokenizing money market funds. Yep. And that kind of goes to this larger question. So Bitcoin spot ETFs are here. We'll get a decision on the Ether spot ETFs, but from a macroeconomic viewpoint, those aren't moving the needle with respect to VC investments coming back to the crypto space. It's showing up perhaps in the price of Bitcoin being north of 60K and touching all-time highs in March. But what needs to happen, broadly speaking, in order to bring that capital back into the ecosystem, the kind of capital that we saw during the last bull run?
It's going to be difficult to say that we're going to get the same amount of capital invested as we did in 2021, maybe early 22, but it's coming back. Just in Q1 alone, quarter over quarter investments is roughly around 40% for both deal value and deal count. So that's a huge increase from quarter over quarter. And so obviously a lot of that momentum was driven by the approval of the spot Bitcoin ETFs. And but also a lot of investors were sitting on the sidelines over the last year and a half or so. They've raised, if you look at crypto native venture funds, they raised a large amount of capital in 2021 and 2022 that has not been deployed yet. Mm-hmm. And so I think at this point now, the sentiment has changed and investors are getting more comfortable making investments. So, I think the $2.4 billion that you saw invested in Q1, that's probably going to be the low watermark for the year. And so I think that's going to continue to increase. And
that's interesting. You kind of draw out this comparison between crypto native VC funds versus something like a A16Z or Andreessen more broadly, or even Sequoia getting into crypto related ventures. And I bring this up because this idea of tourist capital, I feel as though everyone flooded from anything related to blockchain into AI. But that's not necessarily a good thing because at least from what I've seen, if you've got this tourist capital flooding into a space, perhaps it's not being deployed to the best companies in the best ways. You get prices, you get companies that are overvalued. Yep. And if you have a blow up there, it embarrasses the entire sector. So how do you think there's actually a net benefit to seeing money leave the space and having focused VCs that are crypto native, making more deliberate investments, even if the deal values are nowhere near what they used to be in 2021?
Yeah, I think so. And, crypto native VCs like this, investing in this environment better because you don't have to compete as much to get into a deal. And even for founders, maybe you don't get the valuations that you would like to have, like these high valuations that we had 2 years ago, but you do, or 3 years ago, but you do get investors who are much smarter, mm-hmm. who can not only give you capital, but can also help you, deploy infrastructure, help you with staking, whatever it is. So you get more expert investors on your cap table. So even though you don't get those valuations, it's still a pretty decent time. The thing is, if crypto continues to go up and we're in this full-blown bull market, the tourist investors are going to come back, right? Because like we said, crypto winter, we're probably in crypto spring now. Once it's summertime, everyone's coming back. Everyone's on vacation. All the tourists are here. So, I think, we've seen that in a couple cycles now for crypto, right? And so you're right. A lot of the money that you see right now is the crypto native VCs, and it's not, generalist investors or crossover funds or any of that. But, at some point they will return.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.